Today, Genesis halts withdrawals from its lending platform. Kyle Davies of Three Arrows Capital blames the collapse of the crypto hedge fund on Sam Bankman-Fried. And Crypto World explains how Terra's demise earlier this year ultimately led to FTX's downfall. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Digital currencies are giving up yesterday's gains and then some as the FTX sell-off rages on. By noon Eastern, Bitcoin was down 1.7% to $16,500. Ether fell more, about 3.3%, to just above $1,200. And FTX's exchange token, FTT, continues to take a beating, down 20%. The losses come even as Binance's CEO tried to reassure investors, saying today that the crypto industry would be, quote, fine, and that digital currencies have shown, quote, extreme resilience. That's all despite the contagion from FTX continuing to spread to other crypto exchanges, which we'll get to later in the show. Changpeng Zhao, also known as CZ, was speaking at a conference in Abu Dhabi where he officially announced the creation of an industry-wide recovery fund to help the industry through the most recent crisis. Okay, let's talk about the top stories. First up, the crypto lending arm of Genesis just halted withdrawals in the latest sign of contagion for the industry. Genesis Global Capital reported more than $2.8 billion in active loans by the end of its third quarter, and now the company is halting new loans and redemptions, citing the turmoil at FTX. In a statement on Twitter, Genesis said, quote, "We recognize how challenging this past week has been due to the impact of the FTX news. At Genesis, we are entirely focused on doing everything we can to serve our clients and navigate this difficult market environment." Now, according to CoinDesk, the company's interim CEO said Genesis Trading, which is the broker-dealer arm of the business, is capitalized and operated independently from the lending unit. Next, Kyle Davies, the co-founder behind defunct crypto hedge fund Three Arrows Capital, is also speaking out in the wake of crypto's latest crisis, and he's partly blaming Sam Bankman-Fried for 3AC's collapse. In an interview with CNBC this morning, Davies claimed FTX hunted 3AC's positions.
If you recall, one of the biggest critics of us right after our collapse was Sam Bankman-Fried himself of FTX. And we now know, as things are coming out, that he was probably covering up a lot of things on his side. And it's also coming out that he hunted our positions. So I think it's one of those things that in the trueness of time, we will find out the truth, and we're looking forward to justice.
Davies also addressed the hedge fund's bankruptcy proceedings and allegations that he's in hiding to avoid law enforcement.
Well, you have to understand that we're a trading firm, right? So first of all, we're paid to take risk, but for two, we take all kinds of risk. We take gross lever, we take spread risk, we take gross, we take directional risk. And after the Luna collapse, everything just unfolded extremely quickly. Every major position that we had went against us. All spreads, all discounted trades, all directional trades, everything. And that was in part because everyone had on similar positions, but also in part because there was a credit squeeze and everyone had to unwind at the same time. So there's a lot of pain going through the crypto industry.
Last, House lawmakers are calling on SBF to testify in a hearing surrounding what went wrong with FTX. A bipartisan group of House Financial Services Committee members will hold a hearing in December where they plan to grill executives from the crypto exchange, along with Alameda Research, Binance, and others. In a statement, Representative Maxine Waters said, quote, "The fall of FTX has posed tremendous harm to over 1 million users, many of whom were everyday people who invested their hard-earned savings into the FTX cryptocurrency exchange, only to watch it all disappear within a matter of seconds." Unfortunately, this event is just one out of many examples of cryptocurrency platforms that have collapsed just this past year. All right, on to our main story. It has been a wild ride for the crypto industry since FTX confirmed its liquidity crisis last week, with new details emerging every day. So Crypto World took a moment to break down just how FTX's collapse happened, including its ties to Terra's collapse back in May.
The demise of algorithmic stablecoin Terra and its sister token Luna in May of 2022 wreaked havoc on the crypto industry.
Check out this stablecoin. Terra's Luna breaking its one-to-one peg to the dollar, plunging to as low as 26 cents this morning.
What's happening with Terra USD? How is it not a black eye for the entire industry?
It's one of the worst scandals in the history of the crypto industry.
Digital currency prices were decimated, and several businesses were forced to declare bankruptcy as their investments in the failed projects came back to haunt them. But amidst the drama of those days and weeks after Terra's collapse, Sam Bankman-Fried, who founded trading firm Alameda Research in 2017 and crypto exchange FTX in 2019, quickly rose as the savior of the industry. SBF, as he's also known, and his companies poured billions of dollars of liquidity into the space, bailing out businesses like BlockFi and Voyager Digital. As recently as August, SBF told CNBC that FTX had $1 billion in cash to deploy at any given moment.
It's not going to be good for anyone long term if we have real pain, if we have real blowouts, and it's not fair to customers, and it's not going to be good for regulation. It's not going to be good for anything. From a longer term perspective, it's just that was what was important for the ecosystem, is what was important for customers, and it was what was important for people to be able to operate in the ecosystem without being terrified that unknown unknowns were going to blow them up somehow.
It seemed like SBF had become the white knight of crypto, the lender of last resort for an entire industry. And for a while, things were looking up. The price of Bitcoin and other cryptocurrencies leveled out, and developers continued to build new projects. But now, nearly 6 months to the day after Terra Luna collapsed, FTX has filed for bankruptcy protection, and Sam Bankman-Fried faces investigations from U.S. regulators and potentially the Department of Justice. So, what went wrong? On November 2nd, a report published by CoinDesk found that Alameda Research, a trading firm launched by SBF to trade thousands of digital assets, was heavily invested in FTX's own token, FTT.
It was a question as to whether or not they were, fully solvent or fully able to continue operations in the way that they have been.
After the report, Binance CEO Changpeng Zhao tweeted that the company would be selling its FTT holdings due to, quote, recent revelations.
Then there was this whole kind of back and forth over Twitter between CZ, who runs Binance, versus SBF. And everybody from the Alameda and FTX side said, there's nothing to see here. We're totally fine. We're completely solvent. No questions asked.
But that didn't last. A short time later, Bankman-Fried tweeted that Binance had reached a deal to acquire FTX, did about a day of due diligence looking through FTX's finances, but Binance reportedly didn't like what it saw and backed out of the deal just a day later. With few options remaining to save the company, on November 11th, FTX filed for bankruptcy protection, and Sam Bankman-Fried stepped down as CEO.
It's a blow to the industry that we didn't need right now. And it all started because of a simple tweet that CZ did, because it created a run on the bank and it proved that FTX was actually insolvent, which really is devastating to the industry, which you can now see from the prices across the board.
It turns out FTX didn't have $1 billion to deploy. Instead, it had a gaping hole in its balance sheet. A report from Reuters found that the exchange was transferring billions in customer funds to Alameda Research to shore up the trading firm's business. Sources told Reuters that a large portion of that money disappeared and that top executives had bookkeeping back doors to prevent some of those transfers from being noticed.
It's likely that they were starting to have issues in June, and maybe they were actually more wrapped up in the Luna and Three Arrows debacle than they let on. And either FTX had a hole because of that, or maybe Alameda had a hole because of that. And one was used to plug the other. That's the only kind of reasonable way that we can assume that something to the tune of $10 billion goes missing.
Those transfers went unnoticed until customers rushed to withdraw funds amid uncertainty over the company's finances.
When you're running in a fractional reserve process, withdrawals are actually the thing that start to pull your lifeblood away.
So after the collapse of one of the most trusted names in crypto, where does the industry go from here?
There's a lot of travesty going on at individuals, families, employees of the place. People put money into the system indirectly and directly. Indirectly meaning there were people who trusted the whole capital markets of crypto. and now they've lost a lot of that trust on the retail side. So indirectly, they've been affected. But I remember Lehman, there were people who put all of their bonuses back into Lehman stock. And then when it happened, it seemed like it happened all overnight. And you have families who lost their life savings. There are similar situations here. And I think those are the people that we should think about and try to support as much as possible.
The first big issue is contagion, when other businesses could go under because of their ties to FTX. The crypto exchange says it has more than 1 million creditors and up to $50 billion in debt. The other issue is making sure something like this doesn't happen again. Some in the crypto space say the industry needs to step up and regulate itself because lawmakers around the world have been slow to enact guidelines. Others say this latest disaster could move regulators to act much, much faster.
I think regulation was coming regardless, and now it will come really, really quickly.
This is a case of unregulated centralized finance running away with it again, committing, potentially illegal actions. And so I think if we can take the time to educate lawmakers and regulators on what is decentralized, what is centralized, why is there a dichotomy there, and how massive is this separation, ultimately we'll be fine. But that's really the education process that we're stepping into right now.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.